The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the opening bell, and we got records across the board right now. How about the S&Ps yesterday? 61.02 on the futures, and you see, overnight, just been chopping around within about 1 or 2 points. We're negative by 2 points right now in the session. We're trading at 6,096. NASDAQ 100. Negative by 12 points. You see the acceleration as well. 21,548. You're talking about record highs in the NASDAQ 100. There's your daily. You jump back to the S&P for a moment. There's your record high. I mean, look at this run, right? You accelerate on the election. You give it back a bit. And since the 18th of, let's zoom it in, that low on the 19th of 58.50, you get the S&Ps up 250 points from November 19th. Only one red bar in between there. You jump over to the Dow, 45,067. We're negative by 40 points in the Russell right now, negative by 5. Bitcoin's having a moment. It's having a moment for sure. We hit 105,000 this morning, 103,980. You're up by 4%. You're up by $4,000. There's your weekly. It's been a rocket ship. Since 15,000, you consolidate this year between 50 and 70,000. You break away on the election, and we are now at 104,000 on Bitcoin. Quite the acceleration. Not surprising, you get the likes of MicroStrategy, going to be up 10%. Now, remember, MicroStrategy is going to open at 440. You were just at 540, but Bitcoin's at all-time highs. You have an X factor of volatility in that equity, but nonetheless, we'll keep going. You jump over to crude. Little volatility on crude. We're above 70. We were at 68 this morning. We're back to 69.06. We'll talk some crude later in the program. And we got some movement in yields, the dollar, and in gold. You got the 10-year right now. We're talking about a yield of about 4.22. We're at 4.21 as I speak. 4.21 the yield on the 10-year. Now check out the dollar, okay? The dollar, how about this action? All right, this could be the move of the day. As we got 105.80, you're down a full point from where we were yesterday. Now, what's so interesting is gold really hasn't moved. Yeah, you did get an acceleration yesterday up to 26.80. We were just trading at 26.78, and meanwhile, we've had the dollar drop a full point. So don't think, okay, that if the dollar, yes, it will benefit you. It's like having the wind at your back. But right now, there is something different going on between the relationship of dollars and gold priced in dollars. There is more going on than those two, which are usually inversely correlated, okay? Gold has held up so well when the dollar strengthened from 100 to 108, and since we've eased a bit, okay, you haven't really gotten the strength in the same way that you didn't get the weakness on the way up. But nonetheless, you got to move. You got 105.88. And as I mentioned, right, you back it up from where we were. We were just up a point higher, and then you back it up even further than that, taking a look at the dollar. You go back on an hourly. There's your 108. Okay, we're breaking below 106. You got recent lows out here, basically where we're sitting from right after Thanksgiving. And we're sitting at 105.86 right now in the dollar. We got less than 2 weeks to go until a Federal Reserve meeting. And we jump over to the VIX as this market just goes one way. And I kid. But 12.89 on the open yesterday. Interesting. Now, the VIX is predicated off the S&P, right? There's your S&P. We accelerate to highs. But what happened to the VIX yesterday? We actually got an elevated VIX as the market continued to all-time highs across the board. Always interesting to keep your eye when you have an elevated volatility premium in the VIX. Now, remember, the VIX is the volatility index. It's predicated off the S&P. When the market is going down, people are protecting themselves by paying more for a premium to protect themselves against volatility. Usually when the market is going up, they're paying less for that premium. yesterday, a little bit of divergence. As you started the day at almost 13, and as the market crept higher the whole day, you finished at 1350. Historically, you're looking at about a 16, so well below where we've been. But interesting, when you start getting positive days to record territory, and the VIX is so low that it actually goes up, right? 1289 is a low VIX. Now, we all know we can get lower. How far back do we got to go? Yeah, there you go. You go to the beginning of this year when we were sputtering around 12 for a while. You got an occasional flare-up. You really want to see something bonkers, man, right? How about the 856s of 2017? Look at the volatility of 2017, man, right? Remarkable. That market was on a one-way trip. Trump came in 2016, and the market said deregulation, tax cuts, zero volatility premium. When we go higher, 856. Then we go through the volatilities of COVID, the years after it, 2022, when the Fed was cutting. There was, look at that. The lowest the VIX was in 2022 was 1634. And on most occasions, on most months, you were paying 18 for the VIX on a low, 21 in July of 2022. 19 was the low. We're in a different world, right? You do have some elevated levels there, but as you can see, nothing like the volatility we dealt with when we were dealing with inflation of a generational nature. We're back to 1315 though, and this is where it's a long-winded explanation to get to the point of, hey, this market's becoming a little bit complacent with everything going on, with where the indices are priced. Even on a day like yesterday, you push to record highs, and the market says, you know what? We might not want to price the volatility at 13 right now, because that's a very low number with the risks that are on the horizon for a market priced at 6,100. All right, we go to some economic data. Jobless claims out this morning, ahead of non-farm payrolls tomorrow, and decent numbers. You get 224,000. All right, yes, it increased by 9,000. That is the week ended November 30th, which is Thanksgiving week. Okay, now, as they say, I think they say it in this one, things get volatile during the holidays. Okay, yeah, there it is. Choppy around the holidays, to put it best. You get a holiday week, you get jobless claims for Thanksgiving week. Now, you look at continuing claims, which is 1 week delayed. Okay, continuing claims are as of the week November 22nd, so that's not a holiday week. And on that one, you actually got a downtick. 1.87 million in the previous week. Yeah. I'd keep your eye on continuing. Now, yeah, you got a huge jump in initial, okay, but look at the initial. We'll expand this. This is a healthy number that we're at on an initial claim. 220,000. When you look at the number of people in the workforce, it's just a healthy churn of the cycle of business. Continuing claims, it's been a rising number since April. Okay, we were at 1.7. We're now pushing 1.9. You do have a little bit of a downtick, but keep your eye on those. But decent numbers. And the market, as I said, no real reaction, right? You check out the S&Ps overnight coming into it. You talk about no volatility, man. Just chopping around 6,095. We're negative by 1 point on the S&Ps right now. And we'll see where we go from there. Tomorrow, an important one with non-farm payrolls. We got the ADP private payrolls yesterday. Big numbers still in those wages, right? You change a job, you're making more than 7% more than you're making 7% more than you were a year ago. You stay in the same job for ADP numbers yesterday, you're still making almost 5% more on an annual basis. And remember, that's on the previous numbers, which were 7% in 2022, right? Almost 5% in 2023, another 5%. People are making more money, man. And that's the bottom line. All right, folks, we're coming back. We got a lot to talk about. We'll talk some Bitcoin. We'll talk some other equities that are moving on Thursday. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. S&P is just negative by 1. We're sitting at record territory across the board right now. Bitcoin, as I said, having a moment, up at 104,000, right? Why do you like Bitcoin? How about 10% moves from where we were yesterday? 10% moves from where we were yesterday. Remarkable. You jump over to Ethereum. And you got to go back. Ethereum, at the highs of earlier this year, but not quite at 4,900. Remarkable. Bitcoin's the crypto, right? And you look at that run, right? From where we are, Bitcoin was back at 60,000 in 2021. At the same time, you had Ethereum back at 5,000. And meanwhile, Bitcoin has almost doubled in price since then. That would put Ethereum at almost 9,000 or so. So, if you're looking at some of those cryptos, be careful out there. And boy, be careful with Bitcoin because, it's not exactly financial advice saying careful, folks, but I was looking at this chart last night. I was looking at it this morning, okay? And I said to myself, this feels like we're in the stages of late 2021 here, Bitcoin. And all that means is that on a shorter term basis, you might be ripe for a pullback. All right? As traders, you want to analyze risk versus reward. You bought Bitcoin yesterday, you made 10% on your money within a day, okay? And that's buying it at 94,000. But when you look at this chart technically, you look at the accelerations it's had prior and the pullbacks it has had prior, just make sure you got stops in place, folks, okay? Because you look at these equities like MicroStrategy, and that's what I've been talking about. When you're talking about leveraging Bitcoin, it's great if you're trading MicroStrategy. Just make sure you got a stop in place. If you're holding it overnight, make sure you're aware that this thing can drop 25% overnight to that degree. The volatility we're getting right now in crypto with the size of how big the market cap is of crypto is remarkable. All right, we jump around to some of the other equities with earnings. News, not earnings. And you got Robinhood up by $3. So, jumping around to Robinhood. Hot new tech bet, the desktop computer. It seems like everything's going back to the way it began. Now, when the pandemic was rocking and Robinhood was accelerating, I had to create a Robinhood account just to see what it was about. Deposited a little bit of money, used it. It was fascinating in terms of the technological ability within the phone. They definitely gamified it. As somebody that loves options, it was interesting to see how it was not quite for the astute traders that some of the more complicated platforms are, but it made things very simple, especially in multi-legs. But I always found myself saying, I can't believe people are trading, sophisticated traders would ever trade on here. And here you go. That's what they're doing, right? Serious traders, yeah, they're on their computer. You know, yes, you can manage your portfolios potentially from online, but, you know, whether you're in the YouTube Tiger's Den, whether you're in the den, a lot of times that is going to be something that is very difficult to mimic the capabilities you have for multi-leg strategies, charting, technical indicators, etc. And so Robinhood, they got an investor day going on yesterday, and yeah, they're talking about potentially going to try and get into the desktop computer. 50% of overall retail trading takes place away from mobile devices. You don't hear about this often, right? Everybody remember the early days of Facebook when the stories were out that Zuckerberg would tell anybody, and hindsight's 2020, and that's why, you know, you look at the stock like Meta. We're going to jump around here, okay? Zuckerberg in the early days told any engineers that came in his office for something that was to develop the products for desktop to get out of his office unless they were working on something that was mobile, okay? He knew desktop wasn't the future, mobile was the future. Now he knows that AI and the metaverse is the future. It's interesting that the future was going to be trading on your phones, but people who are trading more actively, okay, and it'll get there. The technology will get there on a phone, but I think we can all relate to a certain degree that it just can't mimic the capabilities of sophisticated platforms when it comes to sophisticated trading. You want to go buy an equity, it's simple, but many times these days, people are trading multi-leg strategies. They are loving options, which in and of itself is a little bit difficult to trade in there. So you got Robinhood, their investor day. They're talking about going to Asia. They're talking about going to the desktops, and the market likes what they're talking about. You're up almost 8% in the pre-market right now with Robinhood trading at $43. That's your longer-term chart of Robinhood. A pandemic darling, up to $85 when they were making all of their money off crypto. Do you remember those days? How much money they were making off crypto? Down to $6. You're back to $43 right now. $43 for a Robinhood. All right. What else we got going on in this market? Yeah, let's talk a little NVIDIA. Why not? NVIDIA shares slightly in the red right now. You talk about a rocket ship, man. Up to 145.79. Just off the all-time highs of 152.89, made on November 22nd. And you got NVIDIA. It would make sense, right? Story out there from Bloomberg, yeah. Open a Vietnam AI center in Southeast Asia push, okay? They're going to provide technology to Vietel Group's AI data center. NVIDIA is going to acquire another company as well. The project will help develop advanced AI in the country in Vietnam, yeah. And he's working with the government over there. They're going to advance Vietnam's AI by building AI infrastructure. And it's interesting when you go across, right? Yeah. You got Southeast Asian countries competing for big tech investments in Vietnam. They're going to get one. You look at these numbers, man. 250 million, 100 billion. Vietnam is targeting annual revenue of more than 100 billion in the semiconductor industry by 2050. Wow. Good luck going 26 years in the future. You tell me you know what the world's going to be like in 26 years in the future? I'll say good luck to you, man. You think about that, right? Exponential growth is very difficult for the human mind to understand. And I try and think about, we have conversations in my personal life, and I say, what is the world going to be like in 20 or 30 years? And I say in 20 or 30 years, there's going to be flying cars, self-flying cars. By 30 years, definitely. So by the time Tommy's about 30 years old, there's going to be flying drone cars, flying, whatever you call them, right? But what's remarkable is that as things accelerate, so here's a question for you. Think about this, right? Which one is easier? And yeah, we're just talking, but this is how quickly things can accelerate, because my rudimental understanding of things is that it actually may even be more difficult to have self-driving cars when you think about how hard it is to interpret everything you see on the roads in front of you and understand the nuances of every single thing that's moving and what lanes to stay in, and you're sometimes inches from other cars on the road versus maybe just self-flying drones. They're coming, folks, and the video is going to be there. We got markets flat. We're coming back for the opening bell. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got the S&P up by 1 point, trading at 6,099. NASDAQ 100 barely in the red by single digits. Dow, we'll call it flat, even though you're negative by 3. Make it positive by 4, and you get the Russell right now, negative by 3 points. Bitcoin sitting at about 104,000. We'll see how it holds up today, but you're talking about a record, and boom, you make it with an impact. Yesterday, you accelerate to about 100, and you take off at about 9 p.m. yesterday. You talk about an acceleration. All right, let's talk some other equities that are moving this morning. Five Below out with their numbers. Interesting, right? The haves and the have-nots. Adjusted earnings, 42 cents a share, well above the 17 the market was looking for. Revenues of $844 million, well above the $799. And it is interesting that the dollar stores having problems, right? You jump over to the likes of Dollar Tree, that's quite a chart. You chop around in the 160, 140 area. You drive down to $60, a little bit of a bid. But yeah, Five Below. It seems like a $5 bill, unfortunately, is what a dollar used to be. Dollar stores aren't going to be around. Even the Dollar Tree, right? They raised theirs. But nonetheless, Five Below, yeah, some big numbers for them. They're jumping higher by 15.5% today as they beat across the board. And as I say that, you jump over to Dollar General. And yeah, they're chopping around on their numbers. They had a slight beat. Same-store sales, 1.3% is what they grew by. The market was looking for about a 1% growth there. So maybe the max pain is over for some of these dollar stores. All right, Dollar General, my goodness, from $2.50 down to $80. This is when the market's accelerated higher. And then, as I mentioned, you look at Dollar Tree, down dramatically as well. And Five Below catches a bid after trading from $200 to $65 earlier this year. You jump over to Kroger on their numbers, down about 0.7% right now. How about $33.6 billion in revenue? The market, though, they were looking for 34. That's the initial spike on those numbers, I think. Yeah, they narrow their full year guidance. All right, we talk about what else we got going on. We talk the jobless claims. Let's talk a little bit of trade deficit. Narrows from more than a 2-year high. And that number shrinking almost 12%. A decline in merchandise imports. So this number out this morning at 8:30. The value of imports falling 4% to $339 billion. Now you look at this number, though. That's the value of goods and services through imports. $339 billion. The trade gap shrinking nearly 12%. Yeah. Look at that volatility you had from COVID, and then you accelerate higher with imports well above. Look where we were. Look where we came into COVID, $250 billion in imports, and boom, you accelerate higher up to almost $350 billion. But nonetheless, that number falling to $339, and that was exceeding a 1.6% decline in exports is the number there. So that number out at 8:30 as well. All right, we keep our eye on the dollar, which had a 105 handle last time checking in, and yeah, it's continuing to drop. Keep your eye on this one, man. Let's check out that gold contract. Yeah, no reaction on gold. So interesting how it all plays out, right? People selling their gold to buy Bitcoin? I kid. Not really, though, because it is a certain value to take your money out of a currency in something that you can put back into any currency, right? Gold, you can do that. You see many times. People in India love gold because it's a store of wealth. Bitcoin is a store of wealth with a much more volatile exposure. But it's getting to the point that you can bank on the fact that there's going to be some value there. Not exactly like gold, but you see the comparison, right? You can buy it, and you can do it a lot more easily than you can with gold. But yeah, dollar fading right now, and we got gold just chopping around at 26.69 right now. We keep our eye on yields. We're getting lower price and higher yield right now, which is especially interesting on what's going on in the dollar right now. We get the 10-year yield at 4.22%. And this dollar cannot find a bid right now. Look at this. Let's put it on a minute. Look how fast we're dropping. Just since 10 minutes ago, we dropped 250 ticks almost. 200 ticks. We're at 105.75. You put it back to a daily, and we're breaking below that 106 mark, and that 106 mark is an important one, folks. You're talking about 2 years. This area that we're bumping up against is an area of resistance, and you start making a run to the lower side, and you're talking about 100 right there. Let's see where we go. Jump over to crude, just trading at 68.90 right now. And let's jump around to some of the Magnificent Seven. As we get the NASDAQ 100 up another 10 points. Apple shares up by 0.2%. Amazon's having quite a run recently, up to 220 on the dot yesterday. We were at 204 less than a week ago. We're trading right now at 217. Amazon slightly in the red. Microsoft shares, look at that bid. We're pushing 440 on Microsoft, up 0.5%. Google shares up 0.3% as well. Jump over to Meta, speaking of, up 0.4%. We were as high as 619. You jump over to Tesla shares. Oh, they like Tesla. What's going on with Tesla this morning? Guggenheim, adjust the price target to 175. Yeah, either way, Tesla. Wait, what did they do? 175. I had to do a double take. I mean, that can't be what's boosting it higher. Let's see if they say why it's moving. Yeah, there's nothing positive. Maybe that's just the crypto mojo of everything going on. But you got Tesla trading higher dramatically to 367.73. Yeah, you jump over to United Health. Sad story, man, that gentleman. And, you know, you see the news stories around it. I mean, the Journal, just to pull up, this is the front page of the Journal, okay? Murder at dawn. You talk about trying to get some clicks, man. But nonetheless, and then they talk some intel as well. But yeah, it's a vicious one because the loss of life, no matter what. And it was on the front page, and there it is there. Questions of motive. I mean, the shell casing said words written, and it seems like it was a disgruntled person, which is what it was thought of. He was the head of the insurance division. And, you know, you don't want to have that conversation right now because it's not fair to the loss of life, no matter what. That's business. You know, you don't go out and hurt somebody or kill them like that. But the insurance conversation and healthcare issue is never going to stop being a topic, folks, that persists forever. And that's the battle that we're going through with Obamacare going on, 20 years almost, 15 years, something like that. And yeah, it's a system that has many problems in it, unfortunately. And doesn't mean that it should tie into this conversation because that is a sad deal as they go over it. And I believe the person's still at large. Pretty remarkable. They jump on an e-bike, they go into Central Park, and somehow you get away. I'll tell you something, folks. I just assumed that you couldn't do something like that in this day and age with the amount of cameras that took place, that the world, and you probably can't. But it's remarkable that even one day that they can't follow you left and right with the amount of cameras in a place like downtown Manhattan. All right, folks, 8 minutes into the trading day, market slightly in the red. We're right near record territory. Bitcoin sitting at above 100,000. And we'll talk a little bit of Powell when we get back. Stay tuned.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Apologies, getting everything open there. Welcome back, folks. You jump around, and yeah, so we're talking a little bit of Bitcoin. We got markets slightly in the red, but you talk about digesting gains. Bitcoin back above 104,000, and yeah, so it's interesting. You had Powell talking yesterday, and just like I was talking about earlier, and it was his comments I was talking about, right? Talking about the dollar and gold and crypto, and he was talking about that Bitcoin is not a competitor for the dollar; it's really a competitor for gold. It's a small nuanced difference when you talk about, is it a currency and is it a store of value? If it's a store of value, then it would be a competitor for currencies, which are stores of value. And so I'm not really sure how he makes an exact differential there, other than the fact that it's a store of value outside of any one currency, which gold is, right? And that is the small difference. But boy, you got to love when you got the Federal Reserve Chair talking about that Bitcoin is a competitor for gold. Can you imagine that getting done? The Federal Reserve Chair saying that. People use Bitcoin as a speculative asset is what he was talking about with Andrew Ross Sorkin at DealBook Summit. I saw a couple good interviews from that going on. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. Is gold a speculative asset? Yeah, probably. But not like Bitcoin, right? And I would argue that it is a store of value. That crypto is definitely becoming a store of value on a longer term basis. Shorter term, that's the tough scenario there, right? You get volatility in crypto that dwarfs anything you would get in buying a reliable currency like the dollar. Yeah, you're going to get big moves in the dollar from 100 to 108. Okay, that's an 8% swing. You're not going to get a 50% swing, fortunately, right? Because that's where you really start to lose the value. But nonetheless, those comments come out from DealBook. And yeah, the next day you got crypto surging higher. Now we're talking Fed, we're talking Powell. We take a look at the odds in terms of the December meeting. You're talking about a 75% chance, basically 73.8. But you're looking at about a 3-to-1 probability that the Fed is going to cut by 25 basis points from where we are coming down the line, December 18th. Right now, their target range is 4.5 to 4.75% for the overnight lending rate. The market thinks there's about a 74% chance that come December 18th, that overnight lending rate is going to come down 25 basis points to 4.25 to 4.5%. Now, as I've been talking about, once they get there, once you get to 4.25%, the market seems to think that they're going to have a lot of trouble getting to a 3 handle, because you got to go out 7 meetings from right now, or 6 following the cut that we're probably going to get in less than 2 weeks, and we finally start to get 1 to 2 cuts over the next 6 meetings after December, right? And in fact, the market is still assigning a risk level to the fact that by September, we're right where we are right now. There's a 10% chance that by December, we just get about 1 cut. That's 7 meetings. This market, it's thinking we might be on pause right now, and it probably makes sense to be on pause. Think about the unknowns. They're not in the business of forecasting what policies are coming down the line, okay? You as traders, it would probably, depending on how you're trading, okay, if you're trading longer term, and we're coming into a new administration that could radically change certain regulations, you better be trying to forecast what you think could happen and then how that will impact the markets. But the Fed's not really in that type of a position. They look at the data. They're not as forward going. That got themselves in trouble early on, right? Because everybody was saying, hey, inflation's out of control. Well, you could have made that decision yourself. The Fed wasn't willing to make that leap and go forward. They're not going to make that leap this time either, with the amount of, and you heard Chairman Powell at the last meeting, okay? They're not in the business of forecasting what policies are coming down the line. But that doesn't mean that they can't pause with restraint when there could be volatility that the data could indicate. And I think that's where we're going to be. You're going to get a cut. You're going to get a cut to 4.25%. And then the Fed is going to start to become a little bit more cautious, because once you get down to a 4 or 3.75 or even a 3.5% overnight lending rate, there are going to be many people that make the case that the overnight lending rate now has a 3 handle at the same time that we still have wages going up 5 to 7%. Right? There are still indicators in this economy that are lagging, that are inflationary, as the Fed is going to cut to a 3 handle for the overnight lending rate, and that could be a problem that could cause inflation to come back up. And so you're going to see, and then that's not even talking about if tariffs cause prices to rise, and if an immigration crackdown causes that to rise. We'll see how it plays out, but on a shorter term basis, those risks are real, and you're going to see the Fed take things calmly, and that is how the market's pricing things right now. And it doesn't mean, okay, that if things really slow down, they can accelerate it, but they're going to wait to see where the policies go and where they go from there. And what that means as traders is you look at the 10-year sitting at 4.22% right now, and you say to yourself, where's the risk? Well, the risk right now is, okay, you're talking about a market that is on pause after this cut when we get to 4.25%. But then think about this. The overnight lending rate is going to be at 4.25%. That's the interbank lending rate for one night. What's the 10-year doing at 4.22% if the overnight lending rate is going to be on pause at 4.25%, folks? If the overnight lending rate is stuck high, then the 10-year deserves to be higher than we are at right now. And these are longer-term trends, but that's what I would keep your eye out for. Now, I don't know how that one squares with the dollar. I'm trying to run that one through my head, because if that's the case and you have higher yields, you should have a stronger dollar that will correlate and coincide with higher yields. And that's not quite what the dollar's saying right now. As you're getting a little bit of a reversal to 105.79 right now, and we check back in on gold, and that's where it is of a reversal as well. Because what do we have? We have a lower dollar, and you have a weaker dollar, and you have a weaker gold price. Yeah. And we got the market slightly in the red this morning. All right, we jump around to some of the airlines. Delta, how about it? Up another 3%. These airlines are on fire, man. United up by 3.4% as well. JetBlue, always a different story, man. JetBlue barely in the positive right now. Yeah. American Airlines up by 10.5%. You talk about it. Yeah, and they lifted, so what did they do? They updated their Q4 year-over-year total revenue per seat mile growth guidance, flat to 1%, and previously they were looking for down 1% to 3%. what I will say about the airlines is there is a lot of optimism already priced in, folks. They're coming out with a lot of good news right now, but the market knew this was coming. You had JetBlue coming out with their news. That was the pop you had yesterday. Okay. Can I put it back? Yeah, that was the pop you had yesterday when JetBlue said they're expecting a lot more flyers than they had previously anticipated. We'll talk to these airlines when we get back. Expectations sky high. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets all slightly in the red. S&P is off by just 1 point right now. We got the dollar index with a 105 handle, 105.80 right now as we drop off about a full point from where we were yesterday, and we were talking some airlines, and yeah, you got them all trading higher. Delta up by 2.6%. Now, let's take a look at these longer term. You talk about accelerations, but boy, you talk about these charts, all right? It seems like no matter what equity you pull up in the airline industry, there's always a cliff that's hanging out there looming. Now, whether it was 2007, 2008, okay, the financial crisis, the accelerate higher, you have COVID in there, this acceleration that we've just gotten, man. You got Delta going from 37 to 65, okay, almost 67 just yesterday. We're up by 2.6% right now for Delta. You want one? How about the United one? From the 30 handle in August to 103. But it is remarkable how it seems like whenever you get these accelerations up, there's always something looming on these airlines, man. I don't think this is one you just want to put away in your retirement account. You want to trade these. Delta up to 65, as we said. United up to 102. And then you have American, a little bit of a different story there. But even they have gotten quite the acceleration on a shorter-term time frame from 9 up to almost 17. And then you look at JetBlue, though. I have to half chuckle. You talk about a tough chart, man. Right? But all these airlines, you just look at these longer-term charts, okay? Expectations, you're going to see some big numbers, but there is extreme optimism built in across the board for these airlines at the prices you're at and the levels you're at. It's not stopping them yet. S&P is sitting at 6,100, and why not? We'll finish it up with Bitcoin. 104,600 on the dot right now, up by 4.7%. And yeah, powering higher with the S&P sitting at all-time highs as well. Folks, thanks so much for kicking off your Thursday right here at TFNN. Stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. Our man Steve Rhodes with the Trader's Edge. Fast Market at 12. Our man Larry Pesavento coming up at 1. And Jacob Shoup to end it with his program as well. Folks, thanks so much for kicking things off. Stay tuned, and we'll see you tomorrow for Jobs Friday. Have a great one, folks.